Welcome, everybody, to this month's Mac Wealth Live event. We're extremely excited to share a topic that tends to be somewhat confusing to many, crypto taxes, and hopefully by the end of this evening, you'll get some clarity on how to do it, when to do it, if you should do it, and if you're doing it correctly, or even how to audit proof your crypto tax software. So we're extremely excited to do that. And for those who don't know me, I'm Mart McClellan, president of Mac Wealth Management. And on behalf of my partner and president, Tim Stride, and the Mac Wealth crew, let's get started. I met Janna, our featured speaker, or we've corresponded with Janna for a number of years through social media threads as well as through blockchain social media. And the genesis of our conversations came about when one of my friends online said that he had a significant tax liability, like upwards of 35,000 plus tax liability to pay to IRS, and he didn't think that was quite right. And so he asked Janna to look through his taxes to see if that was actually correct. And she did a deep dive into what he was doing, and he realized, or she found out, that the software he was using was not sort of spitting out the right information, and he ended up not only not paying any taxes, but he also received a refund. So I said, hey, there's something to what she has, the information that she has in her brain, and how she can share it with the crypto community. And so she started this whole DefiTax journey. And she's going to share that with you tonight and really give you a very, very confident way of looking about how to do something that is somewhat challenging for even people like myself who's been in crypto for a long time. Now, before we do anything like this, we need disclaimers. This is not financial advice. Please consult your investment advisor, tax advisor for any of the information we're sharing this evening. We're really not talking about rates, returns, and things and performance, but past performance is no guarantee of future results. And I am so confident in this software platform that Janna created that I'm also an investor in this program as well. So Janna, why don't you share a little bit about your story? Who you are. I know you're a CPA. My partner Tim Stride, he's a CPA as well. He worked in the CPA world for 5 years before he became a financial advisor. We called Tim reformed, although I don't think you need to be reformed because you know what you're doing. But you're from the CPA world, of course, and just tell us a little bit why you started the DefiTax.
Yes. So I'm also an enrolled agent. Because of my constant moves, I found it easier to also get my enrolled agent license. And I'm also, because I work in multiple other countries, I also am a member of, I work with a chartered certified accountants. So I also work in the UK, I work in Germany, I work in Saudi Arabia, I work in many other countries. I was born and raised in Germany. I came to the US almost 20 years ago at this point to go to school and live the American dream, which honestly I've done pretty well I think so far. But I've always been very good with math and numbers. It came natural to me, and that is something, when the language was still a barrier, numbers worked well for me. So I've been in accounting, I've been in anything number related field. I've worked as a tax specialist for the government. I've worked as a financial consultant for the government. I've overseen departments and department spending for the government. And at one point I decided, when the government came out and sent me an NDA, that I would no longer work with the government. And I went into public accounting. Taxes are my world at this point. And so about 3.5 years ago, I had clients who are crypto investors come to me. I think I hear myself double.
I think you're good. I think that Cindy just maybe yourself. Okay.
I've had about 3.5 years ago, I had crypto investors that are my clients in the tax world come to me and say, hey, how do I report my crypto taxes? I had no idea. I honestly, quite frankly, I said, I have no idea. So I went down the rabbit hole, and I I went deep down the rabbit hole. I audited every single product on the market, not just US-based products, but products from Australia, products from India, products from Germany, the UK, about 14 of the top movers on the market. Most of them you've already heard of. And I took a wallet with about 300 transactions at the time that ranged from 17, I had some smaller wallets that ranged from 17 through 22, just with some small transactions, not a lot, as you know, in the crypto world. And I connected it to every single one of these products. Every single one gave me a different capital gain and income number, which is, 1 + 1 = 2. And that's the same thing. None of these products should have varied. And it's not that 5 of the products matched and the other 9 products didn't. It was literally none of the products matched with their outcome, with their results. And I didn't know where to start. So
That's a big aha moment. Like, oh my God.
It was. I was literally, I remember I was at a loss, and I think I drove my family insane because I got a bit obsessed with finding the answer. And so what I did is I exported the raw data from every single one of the products. And then I built an API OAuth 2, and I pulled the raw data directly from the blockchain. And that's when I started picking it apart to find out, what are these products doing wrong? What are these products doing right? Unfortunately, there was more wrong than right. And so I sat down and I read through IRS regulations. And I know I've heard this excuse a lot, that the IRS didn't give enough guidance, didn't give enough regulations. But honestly, anybody in the accounting or tax world understands, if you say it is an asset, it is treated as HIFO, LIFO, and FIFO inventory methods. It is honestly very straightforward. You have last in, first out, first in, first out, highest in, and then you have specific identification. So that was what I followed. And of course, the IRS came out with certain regulations along the line. And in February of 2023, the SEC got wind of my research, because I've been talking to a lot of people. I've been getting a lot of guidance. And I met with the SEC division chiefs. And during that time, I also found the issues with each of the products. And I went to the products and I said, hey, I figured out what you're doing wrong. I do not want any money. I have the emails to prove all of this as well. I don't want any money. I just want to give you the details on how to fix your product. 90% of the responses were, no, thanks, not our problem. We don't care. The other 10% I actually met with, and I met with their CEOs and I met with their tax attorneys. And my business partner and I, we were baffled at the end, because A, they could not answer simple questions as to how their calculations and algorithms are working, but also B, they tried to sell us their product after we pointed out the issues. And so when we met in March of 23 with the SEC, we had about 50 division chiefs on the meeting. We broke down our research and showed our proof and everything that they needed to know in order to understand the significance. Unfortunately, their response was, well, fortunately and unfortunately, their response was, oh crap, this is bad. But we are not regulating crypto, so we are not regulating any financial software for crypto. But so they sent us straight over to the IRS division chiefs and to congressional committees, the Ways and Means Committee and a couple of other committees. So we met with the IRS, and in our meeting with the IRS, because the IRS had already started their crypto audits, we went over their processes, and all of our research actually proved that their processes are completely inaccurate. So in 2023, after our research, after we met with their division chiefs, they actually paused the audits. During that time, we met with the Wall Street Journal, and the Wall Street Journal put us in contact with a couple of the universities that are also working with the IRS, but that are also maybe a little whistleblowing on the incompetence. And we are still working to this day with the universities. They have peer reviewed all my research, all my algorithms, and they're currently actually publishing the article regarding all the products out there, including 53 of the so-called crypto tax experts on the market. So if you go to Instagram or any of those places, which one of the people is what your friend used, Mart, that will charge outrageous amount. We audited all 53 of those law firms, tax firms, and anybody that says they're crypto tax expert. We paid them about up to $4,000 for my 300 transactions for them to review them. The end result was that they actually just used $100 software on the market and then handed us back the results. And the reason we could tell is because we had the raw data from all of these products and could compare the exact problems to what we were handed back. So that is currently being published. We're about probably a week or two away from having it published. I do have an NDA in place because I don't want to give my now competitors a roadmap on how to fix it. So it is being published with congressional committees at this point.
Well, you gave them a chance, right? You gave them a chance.
I did give them a chance. I did give them a chance. And so obviously, Mart, you will get a copy of it. Any internal investor will get a copy of it to review it. But for now, it's being published with the congressional committees. Once we have officially launched, we will eventually allow it to be published to the public. But we want to hold this a little close to our chest for the time being. And I've wrecked my brain over the last couple of years because I've said to a lot of people, how can I figure this out? Yet multi-billion-dollar companies, and multiple of these products on the market are multi-billion-dollar companies at this point. How are they still getting it wrong? And the answer actually came to me when I was working with our developers. Our developers kept saying, oh, there's an easier way to do this. And I said, and I had an aha moment, because these products were built by developers, not by people who understand the flow of taxes and the flow of the background of it, the balances that need to, checks and balances that need to happen. They don't look at the nitty-gritty details that we have in place. And so while I was working with them and arguing with them, they said I fired a couple of firms because they would not listen to me. They decided to do it anyways the way they did. And so the firm we're working with now, they're amazing. They follow everything, and we have many things in place to ensure that everything is done the right way. And I'm highly confident that our numbers, our reports are not just the most beneficial, and our features are not just the most beneficial, but that with the audit defense that we have built in to our product, and the IRS knowing full well that my research and my algorithms are accurate, will have an easier time to defend you in an audit. Because, and Tim knows this probably, right? If you're a CPA and you have no way, the only thing you can use is an outside product to calculate 20,000, crypto transactions when the IRS comes and audits you, you don't have a leg to stand on. And so we have made it so that the taxpayers are protected, because my biggest concern is and I don't know if you know this, you can Google it, it's from the DOJ, you can find it. The IRS sent out what's called John Doe letters to the exchanges. I think they send out about 1,000. So not just exchanges, but any product in the crypto world that requires KYC, which is MoonPay, anything that you use to make payments or cash out, and exchanges. And they responded. They responded with US citizens' names and socials and saying, yep, these people have crypto. So the IRS knows you have crypto. They don't know how much, but they know you have it. And that's what they're basing their audits on once they restart. Thankfully, in 24, when they tried to restart their audits, the universities I work with called me and said, hey, we used your research again to stop an audit. So we're hopefully they're stopping, but based on last year's publication, when the IRS pointed out that, hey, we are going to replace 1/3 of our budget by doing the crypto audits again. Their budget in 24 was $2.2 trillion. They're expecting gains, income tax, and fees and penalties to replace 1/3 of that budget.
Yeah,
Here we are.
That's a big number. That's a big number, and it's unless it's done right, it's going to continue to get worse, right? It'll continue to escalate, and so providing clarity to the space is long overdue.
Yeah.
Well, awesome. Very, very cool. Well, we put some questions together here, Janna, for you to share with us, and then you can answer them. And if there's any questions, Dan, we can sort of go through those as well. But first off, what are the biggest risks individuals face when filing their crypto taxes?
There's a couple points to it. So one issue is, as I mentioned, the IRS sent out John Doe letters. It's all online. You can check it out. They send out John Doe letters. They know who you are. Now, in 21, when the little checkbox popped up, have you traded crypto? And you checked no. And you checked that no every year, or you checked yes and didn't report anything. They know you have it, right? So there's no hiding. And I know a lot of people think they have it on a ledger, they have it, on a treasure, they have it on a cold wallet. It doesn't matter. The IRS has already partnered with Chainalysis. You can also find the contract online. There's a contract with Chainalysis to trace assets for the IRS, who are their biggest contractor. They know you have it. They know you bought it. They know it's there. So that's the one part, right? But then the second risk is what product do you use to file correctly, right? Because one risk is, and I'll give you two examples that I gave Mart yesterday. So there's two products on the market, and my legal team, while they say I can't, do any slander. Technically, this isn't slander. I could utilize the names of the products, but I'm still being semi-careful. But the two top products on the
please
market.
Be careful.
Yes. The two top products on the market. I have, and I think I showed it to Mart before. The two top products on the market. I connected that 300, it's grown a little bit now, but I connected that one wallet. And that one wallet actually has the same amount, same data, everything. In one of the products, the report for 2023 shows me as having over $24,000 of capital gain and $25,000 of income. The report from the other product shows me I have a loss of $351 and zero income. Same exact data, FIFO, same exact year, no change.
That's insane.
And yes, and that is the variance that we're looking at. Those are the top two products on the market that most of the people in the world, not just because some of those are not just US products. Those are the top two products that are on the market, the billion-dollar valued products that have such a variance. And I know why. I mean, again, I could go into the details as to why, but I know why. And the problem with that is one product, you overpay significantly. The other product, you underpay significantly. Now, those are the biggest issues because, one, you get audited, you hopefully get a refund, right? The other product, you get audited and you owe penalties and interest and whatnot. So that is the issue. The other issue is when those products give out official forms that your CPA can file, meaning, they give out your Schedule D or, the capital gains and loss. And on the official federal forms, now your CPA will just take it and file it. If, a lot of CPAs do this. And because they don't know, they can't fix it. They can't make it any better or tell you if it's wrong or right. Well, you've now filed something that's completely inaccurate and that either hurts you or helps you. And if you get audited, it hurts you or helps you. You know what I mean? It hurts you anyways, because you have to overpay your taxes. So those are some of the risks that I've come across.
Yeah, and this came across. Obviously there's multiple products out there, and if one product says, you have a liability, another one says you don't have the liability. I wonder if people actually plug in different software programs, like which is going to be the better software program for me to
Well,
use.
some people might not want to pay for both products, right?
That too, of course, that's another problem.
And I've paid for all of them. I've made sure I paid for all of them. I spent a lot of money doing this research and getting all the data, but some people just don't want to.
And they're both wrong.
Yes. Well, the problem is with the features, and we can get into those later. The features of the products are also what cause, a lot of issues, but that's something we can discuss later.
Yeah. All right, cool. Next questions. Can you explain the concept of being auto ready?
Actually, that brings me to the features.
So that was a good segue.
That was a good one. So if you ever get audited by the IRS, they will never allow you to use your QuickBooks or accounting statement, like your anything other than bank statements or something that cannot be doctored for the audit. Okay. And that is the same with the software. The software on the market, and I mean, I'm pretty sure all of you have used one of those. You can go in and you can edit the transaction. And it's not just you can edit a small thing. No, you can edit the date. And the blockchain, what is the blockchain? Blockchain is supposed to it cannot be manipulated. It cannot be changed backwards, right? The blocks are set there. You can't just replace a block.
That's the beauty of it.
Exactly. But in these products, when you connect all your exchanges and wallets and whatnot, and you go look at your transactions, you can actually edit the type. You can make it, you can even delete the transaction out of what you downloaded. But you can edit the type to a degree. You can change it. Like, let's say you bought, I don't know, you sold one Bitcoin and you had capital gains of $20,000. You can go in now and say, no, I only sold half a Bitcoin, and maybe, you know what, I didn't sell a Bitcoin. I'm changing it to Ethereum. And oh, I don't want it to be in this year. I'm going to change the date to next year or last year or whatever date. I can actually add a bunch of fees on it. So you can completely manipulate the entire transaction, which, you know, aside from them being wrong, those features alone, which is the same features that QuickBooks has, you can manipulate data, will make it not audit ready. So our product, while we do have classification allowance, we do not let you edit anything. You don't edit the date, you don't edit the fees because it's pulled straight from the blockchain. You do not edit the type, like you can't change Bitcoin to Ethereum. You can't change the amount. You can't edit any of those details, okay? The only thing you can do is you can declare it a gift, which then we will ask certain questions. You can declare it a donation, which again, we will ask certain clarifying questions, such as the EIN of the company. You can upload even a document to have it stored there that shows proof of the donation. And if it's a gift, we will ask you, are you married? Okay, and we will give you or are you single? We will say, okay, like if you gift more to this one person in, you know, more than whatever your, you know, 36,000, 37, 38,000, whatever that year is, and you're married, then you will have to file a 709. We will let you know. So we are removing those features. We will still allow self-transfer, but the key to this is, you know, if you have a self-transfer, that is a non-taxable event. But I can't just let you say it's a self-transfer. If you tell me it's a self-transfer, we will pull the hash. We will pull and figure out where it came from, the address, and we will say, hey, do you want us to automatically connect this address because you haven't connected it yet? Or if you have connected it, we will automatically identify a self-transfer. That is the extent we will go to let you make anything, customize anything. Because again, like we said, blockchain, you can't change it. You can't go back. Once you send something, it's gone. It's done. Happened.
Yep. It's awesome. Here's a big one. So what are the top mistakes accountants make when they file folks' tax return with crypto?
See, I wouldn't honestly so much blame the tax preparers. If your client comes from one of these products and hands you, like I said, the official document says, hey, I use this product, you know, can you fault them? Because quite frankly, the first time I saw 20,000 transactions and I, quite frankly, I did them manually. It took me weeks to do those manually, but I had to in order to understand what was going on and to get the algorithms right. I calculated those manually over and over and over again, and it hurt my brain. Now, right? And fortunately, it wasn't during tax season, so I had some time. You know, but it took a long time for me to figure out all the little issues and loopholes within it to get where I'm at now and have it validated by PhDs from multiple universities. And so, you know, I guess the only issue that I run into is because some of these products have accountants version where they can, you know, their clients can be connected to it. It's, you know, maybe do some more research and look at multiple products and ask the same questions that I did. Why are there so different outcomes within the product? But unless you go get as obsessive as I did, there's not really a solution for you to get it right. You know, it really, it's almost impossible unless you want to do them manually for each and every single one of your clients.
Yeah, and I think that is kind of the problem. I mean, we are still in the infancy of cryptocurrency. It's such a we're at the beginning, right? And so so many people we work with, people who are fully engaged in crypto, they know crypto, but it's hard times for a CPA or an accountant even to know what crypto is or even how to manage the tax ramifications of that. So in my opinion on that is like they're kind of at the whim of the software programs that are created out in the space, right? It's like, okay, I hope they're right. I really don't know much about it, but I'm making the assumption that these software programs that are, whichever ones they are doing the right thing. But you've clearly said that they are not. So that's kind of they're stuck in a way, right?
Yeah. Yeah. We just got a question. I'm just going to answer this really quick. So the
What was the question?
I've been using HIFO and universal cost tracking through 2024. Starting in 2025, the US wants people to use wallet-based and FIFO. I heard that the exchanges said they will not be ready in 2025 with reporting cost basis. Does that mean in 2025 I will have the option to use HIFO and or universal cost tracking? So I would always, so my product doesn't even allow universal because universal is not as beneficial to you. My product actually goes into the depth. So you can go, so let's say you have a Coinbase, a Kraken, a Bitstamp, and your MetaMask connected, right? Well, MetaMask, your an Ethereum address. You can actually open up, drop down your Coinbase, and you can select Bitcoin for HIFO, Bitcoin, Ethereum for LIFO, and then you can open your Kraken and do Bitcoin for FIFO, and you can actually customize it because we will tell you at every step of the way what is the most beneficial, because the goal, unless you have other capital gains and losses, the goal is to get as close to zero as possible. Zero loss, zero gain, right? That is the goal. And we also have some amazing what if analysis built in. It's twofold, and I can go into that later. But yeah, so for 25, you can, it depends. Let's put it this way. It depends. If the products aren't ready, then there's nothing really you can do other than go universal, okay? But you should still be able to use HIFO. That's still something that you should be doing. So.
And typically HIFO is the best, right? So that's not always, but typically. And,
Yes, so
and
it depends, yeah.
it
And
depends, but
that's the key that we're outlining as well, right? We show you a very good overview of how it looks, and how you can make it as beneficial as possible. And so the what if analysis actually helps significantly. So it's twofold. The
yeah,
first one,
I love when you told me that that's baked into the software.
yeah,
You can compare them, say, all right, what is the best, and
yeah.
how do you manage that
No,
liability?
you
And
do not have to go back and forth and change your counting methods. You actually have a table that shows you exactly how it is. Everything is calculated correctly. But then the what if analysis is different. So I think I told you about it. The what if analysis it's twofold. There's one part. So let's say you say, hey, I need some liquidity, or I want to sell some Bitcoin. You go in and you say, I want to sell 1 Bitcoin. And we say, okay, if you sell 1 Bitcoin from your Coinbase, this is going to be your tax liability. If you sell Bitcoin from your Kraken, this is your tax liability. Now, if you sell half a Bitcoin from Coinbase and half a Bitcoin from Kraken, you're the closest to zeroing out as possible. So we will go in and we actually give you the option and tell you what your damage is before, so you don't have to wait to actually look, like, make the transaction and then be like, oh crap. Then the second part is we will say, hey, you have so far for 2024 or 25, you have a $10,000 gain. Let's go. And the tax loss harvesting that the products have, I'm not a fan of at all. So that's where our kind of what if analysis comes in, is you have $10,000 in gains so far. You have some of these coins and tokens and maybe NFTs hanging around. If you sold them now, you can get your $10,000 gain down to maybe $2,000 gain. go get some losses, right? You haven't used them, you know, they don't look like they're going up. You've held them for a while. You don't have to, but we're going to give you that option anyways. And so we'll give you the details on that. Let's see, there's one more question. Does taxation only occur when you take out money with crypto? So there's a few different taxable events. The first one is when you initiate a trade or conversion. So when you take your Bitcoin and you swap it for Ethereum, for example, that's a taxable event. So if your Bitcoin was worth $2,000 and then you swapped it for $5,000 of Ethereum, you have a $3,000 gain. Now, the other part is if you sell crypto, of course, easy peasy, you have a taxable event. The third part is you have a send. So if you send something that, like I send something to Mart and I bought $2,000 worth of Bitcoin and I send it to Mart and he gets $5,000 worth of Bitcoin. I have a $3,000 capital gains event. The other taxable events are I received something from Mart, or Mart now received my $5,000 in Bitcoin. He now has to report $5,000 of income. And those are the main taxable events. Of course, then there's the interest income if you have staking, liquidity pools, the DeFi funds, things like that. Those are little taxable events that just come up as well. Getting rid of NFTs, mining is considered income, so it's ordinary income. Those are the main taxable events.
Yeah, that's a good question. Which sort of gets to this next question. Is, how does DefiTax? By the way, I love the name DefiTax. It's kind of
DeFi tax, yes.
Define tax. Of course, DeFi is decentralized finance in the crypto world,
Yes.
but DefiTax is a brilliant name for
Yeah.
Define tax. That's good. But how do you ensure the accuracy and reliability of that blockchain data?
I actually signed up for every single wallet and exchange that is on the market. I have about 168 exchanges. I have 2,500 wallets. I own a little piece of almost every token on the market, or have owned. I do a lot of swapping it around. I've created traceable data on every single one of these exchanges, services, whether it's Uniswap, PancakeSwap, the wallets. I've tried using everything myself and create transactions. So I send something there from let's say I started with Coinbase and I created data there. Then I transferred what I had in there over to Kraken and I did it there. And then, I just kept transferring it over and I kept trading. I did some sending and receiving just so I had the different types. I moved NFTs around, everything. So I had the different types of assets that you can have on every single place. And we pulled the data directly from the blockchain. And I had made notes of every single transaction type that I had and compared what came. So I recorded every single one. That's why it took us 3 years to get this done. Because more and more come up, more and more blockchains pop up, more and more. Yep. So, and we don't have all of them because more and more keep popping up, but I have a lot. I had to actually go and use people in other countries, friends of mine, to ask them and beg them to set up exchanges for me that are no longer allowed in the US. So we have them all and we tested them all and we pulled the data and compared it to the actual data that happened that we recorded, so we can make sure that our APIs and OAuth 2 connections pull the accurate data and it matches what actually happened in real time.
That's huge, which maybe even rolls into this next question. You sort of alluded to this a little bit before about your interactions with the SEC and the IRS. What role did they play? I'm sure they sort of, you had some guidance and then you had some thoughts of what they thought, and you probably went back and forth to sort of develop the best possible platform for figuring this all out.
Let's say the IRS brought out the petulant child in me. When I found out how they're doing the audits, I was honestly baffled and even more frustrated. The SEC was honestly very kind and they were genuinely concerned and they did try to figure out a way on how they could help, but they really couldn't because crypto was not under their umbrella. So the SEC, and I still talk to the SEC actually here and there. We still discuss certain things. We go over you know, a few different aspects of what's come up. You know, they check in. So we still meet you know, every couple months or so and catch up on, you know, what they're doing, what we're doing. The IRS, while we talked to them for about a year, they asked us for an official request for information, meaning we kind of outlined the issues we're seeing, and then they send us an official request for proposal on how to possibly implement our product for their back end and how to help them fix it. Now, they switched gears, and we're going back into negotiations with them here over the next few months with the new head of the IRS in place. But they switched gears, and instead of fixing their crypto tax product when they were shut down from doing so because of the mistakes, they switched gears and went into business with Chainalysis in order to trace and seize assets for the IRS. So instead of then going after, and I mean, they did work with Homeland Security, Chainalysis, and other government agencies where they actually went and, you know, found stolen crypto and things like that. So not just the bad kind, you know, but also, you know, working with the IRS and seeing how more money can be brought into the pocket, you know, how they can go after, you know, people who commit tax evasion and they possibly have crypto, which they knew because of the John Doe letters. You know, we're going to go back to the table with them. We hit them with quite a tough proposal, but you know, but again, they're looking at, you know, like a third of $2.2 trillion in revenue from this, and I don't think that is fair. I don't think it's, you know, the discussions we had with them were, look, I don't think it's fair that you penalize or slap tax evasion charges on people who try to report but fail to do right. I think those people, you know, the products you've known for years now that these products are wrong, you haven't done anything about it, you've had no publications out, so they kept using them. So I don't think it's fair to penalize people who've really tried to report. And then we had the discussion with them, and I actually that was another call I had with the universities. The IRS is looking into, again, after we had that discussion that it's a bad idea, they're looking into implementing 1099 DAs, digital asset forms, and they want all the exchanges to send those out. And that is, I think, one of my most concerning discussions I will have to have with them to point out why that is a horrible idea. And I think the best, let me explain this. Do you think Coinbase and Robinhood actually communicate with one another? Or Coinbase and Kraken, if you can't even reach any of them yourself? Okay.
No way.
So let's go back to the $2,000. So you have $2,000 worth of Bitcoin, and now it's $10,000, right? You bought it for $2,000, now it's worth $10,000. And you say, hey, there's some coins on Robinhood, or, you know, maybe I want to send it to my MetaMask wallet or wherever you want to send it. Let's say Robinhood, because Robinhood already does this. That's why I know it's a bad idea. So let's say you're sending it to your own personal Robinhood account. And as I mentioned earlier, self-transfers, not a taxable event. If you send something from your checking to your other checking or your savings, not income to you, right? It's your money. And so now the issue is when you send it from Coinbase to your Robinhood account, Coinbase doesn't know it's your Robinhood account. Coinbase says, oh, look, $8,000 gain. Let's report it on a 1099 DA. That's $8,000 of capital gain. Okay. IRS
that's a big problem.
Well, there's a second problem. Now Robinhood receives it. Robinhood says, oh, look, income, $10,000 worth of income. Let's send a 1099 DA to the IRS with $10,000 worth of income. Now you have an $18,000 liability that the IRS has on their 1099s. And we all know the IRS will randomly, you know, their system will randomly run through and see if you missed any income and then send you a letter. Now try arguing with the IRS and saying, well, those are wrong. Those were self-transfers. My product has something built in that we can actually produce a report that proves that those are self-transfers. But the IRS most likely will say, well, you need to get it corrected by the issuer. Now try calling Coinbase or Robinhood and saying, hey, I need this corrected, especially when millions of other people run into the same problem and try to get through to them.
Yeah, that's very painful. You got to fight that good fight right there. I mean,
I've had that discussion with them, and now I just got a call, I think was maybe about a month or so ago, when the one university in Texas that works with the IRS on a lot of different research projects said they are trying to implement the 1099 DAs again. And so that's, you know, that's one of the biggest issues that I think will hurt people even more so than the crypto audits, right? Because the crypto audits will be ultimately a mess. But this will be something where the IRS will straightforward say, this was reported to us, you have to pay it, there's no way around it, and you have no way of fixing it. Let's see.
Yeah.
Someone has 5 years of we have another question. If someone has 5 years of transactions and about 2,500 transactions per year and use tax software X, they would receive tax reports each year, used in preparing their taxes. If they wanted to work with you going forward, it seems it would be impossible to recreate the past years to have a good starting point in working with your software. Okay, yes. So obviously, you know, if you used one of my least favorite softwares, well, let's put it this, let's back up for a second. So there was another issue that we came across, especially because in 23, we discussed a lot with the IRS and SEC, and we pulled multiple reports from multiple products a few times a year. So the first meeting we had with the IRS was, again, that wallet I talked about that had, you know, limited transactions, and we showed them all the different outcomes. And that was in March of 2023. In October of 2023, we met with them again, and I re-pulled reports. And in that 6 months, 7 months period, every single one of these products made a change in the algorithm, and the 2022 and earlier reports did not match anymore. There was a variance of 20 to 30% now. So that is one of the biggest issues. Your reports don't match what you used anyways anymore. And none of these products actually let their clients know, hey, we made some changes. Your reports are no longer the same. You probably want to amend. Now, to the question, yes, if you come to us, there's obviously going to be a change to your reports for the past 5 years. We will obviously recalculate it, but we have a very strict rule. So we will, before you, let's say you come on with something in 2020, you start with 2020 of transactions through 2025. And we will not allow you to close out your 2021 tax year until you closed out your 2020 tax year. And that is one of the biggest issues that these products have as well. If you go in and say, you know, the Compass Financial, you said that you only used FIFO and HIFO and you used the same method over and over again. That's okay. However, if you're like other people who change methods and go, if you're going between methods and one year you used HIFO and the other year you used FIFO and then LIFO, and you know you switched, this is where the biggest issue comes in. Because if you have used up transactions, if you've used up your HIFO transaction, for example, in 21, and then in 2022 you use first in, first out, it will reuse transactions that you already disposed of in the previous year using HIFO. Because now it restarts the entire calculation based on the first transactions that you have. So that's why we have you close out every single tax year. We have a button, close out tax year. You don't get any reports until you close out every previous tax years. Select what you need, maybe what you had prior. And once you do that, then you get the list, and we internally dispose of your transactions. They're still there for you to see. But in the backend database, they're moved to the side into a disposal database, so they cannot be touched. You cannot redo that tax year. The only way for you to reopen it and change calculation methods, if we get contacted directly, because maybe it's an audit, maybe you need to forgot to add another wallet or anything like that, then we will reopen it and you can redo it. So there's some specific rules, and that's what makes us, you know, audit ready. we can substantiate everything we do. Now, if you come to us and your previous years are now different, let's see, our calculations are different, or because we use the right basis, whatever caused the issue, there's, a couple options. If it's not beneficial for you, I can't force you to make and file an amendment, right? We do partner with a couple of different firms that can file amendments, but I can't force you to file an amendment, right? That is up to you. If it's beneficial for you, you might want to file an amendment, especially, if you owed that year. Yes, you can only get a refund for up to 3 years, but you can get credits, especially if you owe this year. You can get credits that can be applied to it. So there's a few different options, of course. But this is mainly, if you want to go that far back, I think it's mainly if you do get audited that we can substantiate it.
Thanks, Janna. That was a tremendous amount of information you shared with us this evening. It was very, very powerful. If there's any other questions, people can chime in. This QR code is for the wait list. If you want to jump on this wait list, it's coming out soon, right? It's not going to be long from now. Maybe
No. Yes, we're doing beta testing next week.
Yeah.
Mart, you'll be in that group. We're doing beta testing next week. And because again, I'm mainly the person that's holding it back from being launched, just because I'm very picky about it. And I'm very I think the additional thing that I have to mention is we do have a let's call it a business version, enterprise version. We have crypto QuickBooks, basically QuickBooks version, bookkeeping version for crypto. So we have the individual trader. Then we have a business version that allows you to do QuickBooks, kind of, profit and loss, categorization, etc. for anybody who uses in business. Then we do have an accountant version, so accountants can connect their clients as well. And the bookkeeping version is actually very nice, because we are not charging like some of the other products on the market, $15,000-$20,000 a year for you to operate a simple bookkeeping version. And it gives you a very clean profit and loss, a very clean balance sheet, and your capital gains report, obviously, as well.
Awesome. Well, thank you so much. It's as I said at the beginning of the conversation, it's a very confusing topic. Not like everybody likes to chat about taxation, but it's something that needs to be, managed. And it's certainly you put in the hours. I'm well aware of the hours you put in. So this is it's something that I think people, being audit ready, I think it's a big deal. And hopefully people, jump on it and jump on the wait list and check it out in the future.
Yeah, no, I'm very excited to be close to, it's not the end. We're going to keep having to make changes because of the ever evolving industry, but we're going to be close to actually taking a breather and saying, here you go. Now everybody can, get cleaned up, or at least get a good picture of what's going on before the audits start happening.
Awesome. Thanks again. So there's a couple of housekeeping items I'd like to chat about. Anybody on the call who does not have a copy of our book, Your Retirement Smile, you're more than welcome to reach out to our firm, and we'll send you a copy. It shows you how not to take a pay cut in retirement. And then also I wrote a book, or as a contributor to a book called Survive and Thrive, and it was written with Joe Foster, the founder of Reebok. And all proceeds of that book go to a hospital. No, I'm sorry, not a hospital, a school in Uganda. So it's on Amazon, and I'd love you to at least pick a copy of that up. Many of you on the call have been to our annual event, which we have every year. This year, we have just announced our new date. You'll be getting to save the date here in the not too distant future, but it is going to be in November this year. So it's not going to be
hurricane season.
Yeah, you'll be. That's right. You're supposed to come. Yeah, Janna was supposed to be at our event this past year, and it was that weekend where the Florida hurricane rolled right through our place, pretty much. And so there won't be a Cubs game this year like we've done in the years past, but we may be a Blackhawks, or there'll be some other social event going on that weekend as well. But it's at the world-renowned Bleacher Center, so hopefully people can attend. It's an amazing venue to fill your brain with a lot of good out-of-the-box financial information. If you need to contact anybody in our firm, it's very simple. It's just my first name, Mart, one S short of smart, at macrowealth.com. Tim, Seth, and Cindy. That's a QR code if you'd like to set up an appointment to chat about anything financial, whether it's crypto, whatever. We'd love to have a conversation. So, with that being said, I think we're right up against yeah, that's perfect, about 15 minutes or so. So, Janna, really, once again, thanks a bunch. And if you have any questions for Janna or you'd like to reach out, you can contact us and we can forward you on her information, or if you want to share your email there too, that's fine too. Oh, we have a couple questions here. Hold on. Oh, thank you. Oh, send the recording. Got it. Thanks for this. Very helpful and eye-opening. There we go. So good feedback there for Yana. You and I will be in touch here soon for the beta. And
Yes.
um, everybody have a great evening. Bye-bye now.
Thank you so much, Mart. Thank you.
Yep, you're very welcome.